and between what's it called, between education, and I'm also going to bounce between kind of like doing analysis every Sunday, so that way we kind of have like the mixture of both, so I'm not swaying too much to one side. That being said, last week Mr. Babalola always point out on what's it called, on Nasdaq. Now, Nasdaq is a very tricky one. I thought it was a very heavy asset because I've never traded it before, but we had the seasonality. So this time around, I was like, you know what? Let's go for it. Let's see what Nasdaq is about. And last week, if I'm not mistaken, we're trading it on the, let me see, we traded here on the 8th, I think, on the 8th of March. And I think should be around the 8th, yeah. So I went into that trade sometime on this day. We actually waited for the reversal because I remember I was speaking to him and we highlighted a zone because we were so scared of going into this asset. I don't want to make a mistake and go into an asset that would actually put my account in stress. I've spent years building my account. I don't want to be stressed out. So I remember we went in around this zone right here. I think I went around this zone right here. Actually, not this one. I must have gone in somewhere around here. And so far, it is right here right now. And if I check, let me just quickly check my phone because I have my account logged in on my phone. Um, so far, it's only yielded about 627 pounds. So I'm gonna send a screenshot to the um hold on, let me send a screenshot to the chart. And so far, this is what has been yielded, right? So if you guys look at your uh if you look at the telegram, right, that's what the trade has yielded so far. So I went in somewhere around here and we collected about I think somewhere around here. We collected about 5,624 pips. Okay. 5,624 pips. And that's literally how much is given. So it's kind of giving like about from 100. I think it's giving about 100 pounds, you know, in regards to per thousand pips. So it's not really as heavy as, as expected. But that's what I did last week. I didn't really post it up for a lot of people to see. I really didn't see any reason why I should last week post out what I'm doing. But this week I'm gonna do things a little bit different. Also, last week I was telling you guys,
Level of what probably we are done now.
huh?
I think we need a user. I don't think we need a user interface for some of the pages.
User interface. What do you mean by user interface? I'm not following. Please re-explain. Can you re-explain what you're saying about user interface? I'm not really following what you mean. All I know from my mind to access the website, the only thing that's required is just a login. After that, you pretty much can have access to it. You know. But if you want to ask more of those questions, you can just pop it into the chat. I'll read it and then I'll answer you correctly. So the next thing that I was talking about was the euro. Euro was meant to gain strength, right? So let me close Nasdaq. That's done. Euro is meant to gain strength, and this is the main reason I said euro is going to gain strength. When you look at what's it called? When you look at the seasonal, right? From the 2015 and 5 years, right? What we can see is at this point was the lowest, and price is meant to move up until around 12 and then fall. Then from 13, which was yesterday, and yesterday, market isn't open, we should start seeing a new rise in the euro, right? And if we go to the euro chart, because I was actually using the euro USD as a point of reference, it's literally playing out. The 200 moving average right here was a support point. And you remember on, I think it was on Tuesday, which I said euro is going to have strength. If you check the chat room, I posted it right there. And the strength is meant to last until Friday, which on Friday, I told you guys, you should most likely look to get out of the euro asset because a pullback is going to happen. And that's the pullback that just happened right here on the 12th. Let me see on the 12th. Yeah, right here, this top right here, that's where it hit the pick, and then it's dropped to here, and then euro should start, ideally start gaining strength, but we should watch out for these dates right here. What date is this? On the 18th, right? On the 18th, we might see a massive pullback again from the euro, which I'm estimating probably sometime
Okay.
when euro hits the 50 moving average on the daily. It's gonna most likely hit that and then have a little bit more drop to the downside before euro continue its up move. Okay, in regards to that, and then the up move continues from the 29th right now. So from the way analysis I've been doing analysis, this is one of my most powerful tool that I have, which I use to trade with. And I don't mainly use it to trade by itself, but sometimes I do. The next thing is always check what the commercials are doing. These guys are very powerful. I don't know how these guys do the analysis. All I just know that when they're going long on an asset, I stay with them. And when these guys are going short and these guys are going long, I love it more because these guys know what they're doing, right? And from what I'm seeing right now, they've put 28,000 new positions into the market. You understand? And that in return, we should see the market move more favorably towards the euro side. Okay, that's basically what I'm expecting in this trade, right? So the euro assets, I'm expecting strength in the euro. So whatever we do this week, I would say we should focus on euro and look for strength in that asset. Also, I wanted to look into GBP. And one more thing for guys that might get this slightly confused a bit, you might be thinking, why am I just saying euro? Why am I not pairing it up with every other asset like euro something, euro this?
We don't at the moment.
You don't
We
think
don't
like
at
that?
the moment.
Huh?
Yes, yes. For your own work, that's the first step. Basically, the home page and the other about us, those ones won't take you much time to pull up. I think the basic thing is the
Yeah, yeah. So I'm not really following your
yeah.
point.
So that was not really biggie work like that. I don't think that would be that's first people in.
Can you re-explain your point? I'm not really following. Please re-explain. What's the point? You muted yourself back up. I need to really understand what you're pointing at, the about page and all of that stuff. Are you talking about the website and the issue with the website, or are you talking about the analysis? I'm quite focused on analysis at the moment. Okay. So the next one to look into now is the GBP. If you have questions about the website, just in case, just pop it in the chat box. I would respond to you. Just kindly give me a few moments. Let me just touch on these assets and then we'll come back to those. Right. So the next one to look at is GBP. Now, if you're looking at GBP, you've seen GBP is going to bottom out on the 14th, which is today. So GBP ideally should have been losing strength and bottoming out to this point. Now, the challenge is let's see what the COT report is saying about GBP because this week does have good trades to come. And if they really happen, these are going to be trades you're going to hold for a long time. Like the GBP, for example, you're probably going to hold this position up until the end of next month. Now, I know a lot of people haven't even held a trade that long before. So these might be a very good opportunity to hold your trade and see that most of the money in trading is made from holding your trades, not from scalping or taking positions and coming out the next day. It's actually holding long term. That's what benefits you the most in trading. So from the COT report, what I can see is these guys are going more to the long side now. This is giving me a little bit more calm mind, to say, okay, I want to go long too. But the challenge there is this. What I normally do is this. I check if price has been following the way the asset has been moving prior to this time. So if I go and check the GBP assets, for example, let's say I check GBP CHF. Now, what we're seeing happening on GBP CHF is different from what the seasonality has pointed out. Seasonality has pointed out the short should be happening since like the 24th or 23rd up until this point. And when you look at GBP CHF, that short didn't happen, right? Now, for that reason, I ignore this pair. This GBP CHF is no longer in play for me because it's not following what the seasonality is saying. Then I go to the next one, GBP USD. Now, GBP USD on the 24th, there's a fall. Now, let's check. Let's check right here. 24th right here, that fall happened. So now, if I see this price is slightly following, the seasonality tool, the possibility of price continuing to follow that asset is higher. You understand? It's when price is doing something that's already predictable, it's most likely going to continue becoming predictable to the point that it's no longer predictable. But right now, from what I'm seeing, it's being predictable, and also the commitment of traders report is also showing that the commercials are going long. The last thing I require on this entire stuff is the probability. Let me check what the GBP USD probability says, just to give me an idea of when my entry date might be. I know someone like pop the question up. Uh, Leo, I'm gonna come back to you in a second. Just give me 2 seconds. Let me just pop into this one and then I'll come back to you. Okay, is that okay with you? So 14th. Let me just quickly go and check on the 14th. Where now with what I'm seeing now is this, right? Seasonality is telling me that on the 14th is the best day for me to go long, right? Now let's check the probability. Probability is telling me the 15th is not a go. I can't go long at 15th, but the 16th, 17th, I have a good chance of going high. But 18, 19, that's short. So now what I'm going to be thinking in my mind is this: 15 does not correlate with what's it called? I mean, 14 does not correlate. No, it's 15. Yeah. 15 does not correlate with what my seasonality tells me, right? So what I'm going to do is I'm going to wait for when I have optimum correlation, and which is the 16th. 16th, I still have a chance to go long. And on the 16th right here, it shows me long. And coupled with the fact that COT report is pointing long on the GBP, what I need next is check my Williams. Williams spread. Williams spread is already showing that a buy might be coming. And that's my entry. 16th of March will be my entry to go long on GBP USD. Simple analysis, all done. Okay. Does anyone have any question regarding to that? I'm gonna quickly go to the question Leo had about the euro, right? Let me check. So the COT report for euro. No. So with the COT report, what we want to be focusing now is this: we don't really look at the total short position. Now, the main reason we don't do that is because they might have these amount of position in the market, but it doesn't really signify what is happening currently. This is what's happened in the past. This is what's happening currently. 28,000 new position has been put into play. So with what's happened in the past, these are positions just stacked into the market. All of these are positions stacked in the market, people that are holding for a long time. So we kind of ignore what these values are. All these values right here will be ignored. And all what we look into is the changes, right? Just the changes will be our primary focus, because the changes shows what they've done as of the 9th of March. You understand? Which should be last week, Tuesday, if I'm not mistaken. So that's what they've done as of the 9th of March. So we're going to focus on what they're doing at that period of time and ignore what they've done prior to that. Okay. That's why we normally choose, the asset that has the biggest changes, not the highest value. You understand what I'm saying? Okay. And that's why we choose this asset in that regards. In the commitment of trader, I basically use it very simply. The original way we should approach this is wait until we see them going long than ever before. So if we, for example, look at these assets right here, there is really not much to see. We've been seeing short, but if we stretch this all out and check history, check history, we're only going to take the signals at this point. So if you look at this point, for example, where the commercials were at the highest, when they went along the highest, you see what happened not too long after price started going up. Okay. When they have the highest point, price start going up. And these are months. These are not just days. These are actually months. So price is going to go up for months. When the highest point is there, price goes up. Highest point, price tends to go off not too long after. So right here, you see price right here is very low. We expect a move, a up move right here, but if you look at it, there's a slight, just a very slight up move, and this is between May, July, and June, and May and June. So this happened between May and June right here. Just that move right here, and this move right here, this top part, that's what's keep happening right now. So we can't wait. Look at it, for example, since 2012 to 2021, we've only had one, two, three, four. We can ignore this. We can say we lost this because it's not that much. It's just like 2 months. Four, five. So five moves out of six has been correct with the COT report. But are you gonna wait from 2011 to 2021 just to take trades five times? Some people do. Understand? Some people actually do that because big companies don't really care about the small margins that we're making. They look at the bigger bucks. So some people do, but as us, like we trade small time, not too heavy. I don't think most people have more than six figures in their account. I mean, if you have more than six figures in your account, you have more than me now. So what's it called? We tend to look at the small changes happening over time with the assets. So that's why we choose that. Okay, beautiful. So in regards to this GBP USD, we would look to trade this. Now, ideally, this is what I like. I like to see 3 days moving to the upside, but because of the 18, I might see a pullback. And if we look at the seasonality, if we look at the seasonality on GBP, this 18th right here, you can see that pullback already. So there's most likely going to be a pullback on the 18th. So there's that correlation between the probability and the seasonality for that 18th or that pullback. And 19th, we might see a pullback as well. So whatever you make between Tuesday, Wednesday, might get taken away from you on Thursday and Friday if you don't take out that profit. But on the good side is next week, on next week, we're gonna see Monday going up, Tuesday going up, Wednesday going up. Okay, so that would be a good one for next week to trade. But this week as well, we can trade a GBP USD, but we have to be very careful. Now, I want to point out one thing. This is why most people lose in this game: money management. A lot of people might not talk about it that much. We focus more on entry, we focus more on exits, but we never really focus on money management. And what's money management? Let me give it to you. If we took 10 trades, for example, right? If we took 10 trades, let me get on the notes. All right. If we took 10 trades, right? 10 trades, and I lost 9 trades, right? And each of the trades that I lost, for simplicity's sake, let's say I lost £1 on every single trade, right? Which means that in total, loss would equals to £9, right? But on my one trade that I win, right, I won £20, right? Which equals to I won. And my win would be plus 20, right? So even if I do 20 minus 9, in totality, I should still be in profit, right? I should be 11 up. But the issue that happened with most people, the main reason most people blow their account is because some people might even win 9 trades, but lose just one single trade. And that 9 trade that they win, for example, might be £1 each. And then they lose one trade of £20, and they're in minus £11, right? Now, the trick is this, right? The trick is it doesn't matter how many times you lose. So far, your wins are bigger than your collective losses, you still win. That's money management. It's as simple as that. So in which case is this? Don't be scared to lose in your trade. There's no way you're going to do it. You're going to lose. There's no way you would avoid it in this market. There's nobody that say every single time that I trade, I win. It's not possible. You understand? Unless you're going to own the entire planet. You understand? Because that's the entire financial structure of the world. And if you win every single time, how long do you think it's going to take you before you own the entire planet? You understand? So the thing is, this game is designed for losses and wins, right? But you want to position yourself on the winning side. And the best way to do that is this, right? If let's say this trade we're meant to go in on this trade at this specific date, I've already used my ATR value. A lot of people are so scared of losing that they have a stop loss very super tight. You don't want your stop loss to be super tight, because what's going to happen is You're gonna get rated so many times, and then price end up going in your direction. By the time price is going up in your direction, you've lost so much that you just want to make your losses back, right? So don't let the market dribble you. The best thing you should do is go to your ATR value. You see right here, it says 115 pips. Now go on a 4-hour time scale, for example, and that's 38 pips. 38 times 2 or times 1.5, should do the trick for you, right? That should, I think, times 1.5, I have to plus that with 19, which would give me 49, 57 pips, right? A 57 pip stop loss, right, is what I'm going to use. And keep one thing in mind, guys. You don't want to have too big of a position. If your account is like £100, for example, or $100, don't go into a trade with 0.10. You're only giving yourself 100 pips, which means in this trade, for example, if our stop loss is 50, let's say 50, 57 pips, for example, 57 pips SL, then that would equivalent to £57, and that's not even minus in the broker spread. So if I take away 57 from £100 that you already have, what do you have left? You have £43 left to trade. You understand? And at that point, you're already at a panic mode. So if you know you have a £100 account or $100 account, go with 0.01. If you have a £1,000 account, you understand? Go with 0.10. You understand? Because what would happen is if you have a £100 account, for example, and you went with 0.01, you only lost £5.50, £5.70, right? Now, if we go with the structure that I said before, when let's just say minimum, this is even me taking it to worst case scenario. Nobody loses 90% of the time. Worst case scenario, let's say you only win 1 and you lose 9, right? If you lose 9, and I don't even think you're going to lose 9 in this. So for your collective win, let's say in this case, for example, if you lose 9, 5 times 9, no, if we do, hold on, let me just pull up a calculator. Not really good for this one. Times 9. If you lose 9 times, right, in this game, you only lose 51.3 pounds. Now let's say you win 2 trades, and each trade you won was 40 pounds, right? If you win 40 pound trade 2 times, that's 80. So 80 minus that should give I think, what should 80 minus this give? Let me do a calculation quickly. Minus 80. That should give you a profit of 28.7.
28.70.
Yeah. Thank you very much. So basically, this is the logic. Don't tighten your stop loss. This is the worst thing you can do, right? To tighten your stop loss to 5 pips every time you go in, and you expect accuracy every single time. What's going to happen is the market is going to keep taking out 5 pips, 5 pips, 5 pips off the table. And then when you get so stressed out and you be like, oh, you know what? I just want to win something back, and that the market moves 10 pips in your favor, then you end up taking that 10 pips profit. And if you take that 10 pips profit and you've lost 5 pips 5 times, you are still in debt to yourself of minus 15 pips. You understand? So the logic should be as simple as this. No matter how much you want to win, you have to have it at the back of your mind. I'm still going to lose, and it's fine for me to lose. So far, my wins are greater than my losses. And the best and the most way your wins can be greater than your losses is to hold your trades, right? Hold your trades. Now, let me give you a scenario, one more scenario. Let's say this GBP USD as we're about to trade now, yeah? This goes our way, right? This is one trade and it goes our way, okay? Do you think you're going to trade this 10 times and get rated 10 times before you actually make profit? Think about logically. If I go in now 0.01, I get rated. Going against 0.01, I get rated. Going against 0.01, I get rated, right? How long do you think you're going to get rated till you get a perfect position that takes you to the top and give you that big profit? Maximum 4 times you get rated. So it's fine to lose that 4 to take that 1 win. You understand? And that's how it works every single time. If you look at every single time that you lost and you blew your account or you lost in trading, is basically on the same fact. Your losses are bigger than your wins. Okay? Now, you guys might be thinking, why am I spending so much time banging on this aspect of the trading? Because the honest truth is, this is the only part that makes you money. All of these analyses that I do don't make you that much money. All of these analyses, they're good for me to check the chart and show you where the price is going. But how many people can say for a fact 100% of the time that even though the trade goes your way, every single time, like even though when we do the analysis and the trade goes the way that we predict, that you take out profit from the market? Most people don't, because they've been rated already in their entry. And one more thing, when you want to go in a trade on the daily chart, don't wait. If we're going to buy, for example, don't say, okay, if the price is already somewhere right here, let's say the price opened right here, price opened at this point right here, right? And we're meant to go in on that day, and price has already gone this far. And you're now saying, oh, can I go into the market at this point? What else do you want to take? If we look at the daily structure, market only does 115 pips in 14 days. If price have moved from here to here and it's done 101 pips, are you going to risk your account to go in just for 14 pips left, which is not even guaranteed? No, you won't do that. So guys, please, the main point I'm banging out of this, and the main point it looks like I'm shouting and I'm being passionate about it, is this: I don't want anybody losing money, right? Let's be wise with our money. We all work hard for this money. You understand? We understand how the pandemic is going and how it's so difficult around the world for a lot of people to make money. So it will be so painful to be wasting money on the market, because the market already has so much money and we're just here to take some money from that market. So we're not here to give the money to the market. Okay. So that's the one with the GBP USD. If you have any questions pertaining to that, please drop it in the chat box. Let me see if I can look for, let's look for the euro. Let's look at the euro asset and see what we can get out of the euro. So we know euro 2 is going long, and we might go in on, I think on Tuesday, was it? Let me check. So euro on the 13th, 14th. Euro looks sweet, to be quite frank. So on the 15th, right, euro, we might see the up move for euro. So let me just quickly check euro, euro USD, no, euro GBP actually. No, actually I can't check GBP because GBP is going to be strong. So euro, okay. So euro is most likely going to go up again, right, on the 15th. No, you don't enter exactly at the 0-100 hour. No, don't do that, man. Wait for the price to pull back. Okay, you know what? Let me pull out this stuff. Wow. So this is what I have right here. This thing is called candle wick display, right? As much as I want to show you guys, maybe you should do another second analysis, a secondary analysis. I just need to explain some stuff. Now, this might look, what the heck am I doing right here? This calculates the wick size of price, through time, right? And what this does is we want to look at how much wick each candle has. And the average of the wick size will be where our entry will be, what we expect price to pull back to go in. So let's say we want to buy euro USD now, tomorrow, for example. If we look at this buy candle, we had a wick size of 13 pips the last time it went up. And the last time we had 30 pips, we had 10 pips, we had 57 pips, then we have 6 pips. So what we're going to do is we're going to do the 13 plus 30 plus 10. We're only focusing on the buy because we're going buy, right? Plus 57 plus 6, right? Which gives us 116. And then we divide that by 5 because we looked at the previous 5 candles. If you calculate 10 candles, you do it divided by 10. But I don't really do 5, which then gives me 23.2 pips. So until price pulls back 23.2 pips, I'm not going to start looking for entry. So price has to pull back to around here before I start considering my entry. I don't go in at a 0-100 hour, because what will happen is then price start pulling back. And if I had a stop loss of, for example, let's say I use the 1 hour ATR value, I had a stop loss of 16 pips, right? Based on the ATR value. Let's say I did a 1-to-1 ratio on ATR value, and my average was 23.2 pips. I'm already destined to fail on this one. You understand? So if you put 16 pips stop loss, which is somewhere around here, right? You might be lucky if your 50 moving average pull it up, but the ideal average is somewhere at 23 pips. There's a possibility you get rated. You understand? And if we do the pullback to 23 pips, we can even see right here was kind of like a resistant level on the 1 hour time frame. You can see price actually resisted a while from that zone. So if you did that normal 16 pips, you probably would have get rated out before price even gets here in the first place. So what you want to do, I think this is a tool for everybody to have. It's just pure simple mathematics. Before you go into the price, before you go into a trade, any trade, even if the signal comes from anybody around the world, before you go in on that day, they tell you to go in. I know a lot of people tend to don't give trade ahead of time. They give you on that same day. So you want to calculate the wick size on the daily time frame, and then use that to estimate how far it will pull back. But if it's the start of the week, I normally recommend you calculate on a weekly time frame. Calculate the weekly time frame so you know how much wick we're expecting on a weekly base before we go in. And if it's the start of the new month, do a monthly time frame for start of the new month. Okay, that makes it much more easier. Let me see if I can find a probability for any of the euro assets. I think I wanted to check GBP CHF as well. But let me check euro first if I can find euro. We have so few time left. So let me check euro CHF. Yes, let me see. Okay, I think I can. Wow. Let me see if I will get the tool. I'll get the tool up. I'll see how I can get it. I don't know how I'm gonna give it to you guys to download. Okay, no, I'll figure out a way. I'll send it to you guys so you guys can have that. You guys can have that something. I like to give you guys stuff to help you, man. To be honest, I'm not here for the cash. I'm just here to help you guys grow. Um, Let me check the euro. Let's see what the euro is saying on the monthly 14th. So, So right here we see the euro CHF giving us more of a long, but I don't like the short that we normally get after that. But if we check euro CHF, for example, let me see if I can find something on the euro CHF. Euro CHF. Just gonna do a quick run through. Now, Euro CHF is pointing more towards the long side, right? Now, the challenge with this is this. You can see right here, this price has gone up. Price hasn't pulled back to this region yet. This region right here is where price ideally must pull back to before I'm even feeling comfortable to buy this. But let's say I want to just go in for the quick 2 days with which the probability pointed out to me, right here and right here. What I would do is I'll wait. I see what's happening right here. This is a support region. I go in somewhere around here. I take my profit at the double top. It's not that big asset, 63 pips. But I do what? Calculate the average wick size and wait for the price to pull back at that amount of wick. Probably price is going to pull back to somewhere around here maximum before price start going up on that one. Okay, something like that would be very simple. Now let me check GBP CHF. Let me see. Was it GBP? No, it wasn't GBP CHF. I had another asset in mind that I want to check with you guys. Can't remember which one it was. Might actually have to give me a while to just find this.
You are trying to check Euro USD.
Yeah, Euro USD. I did check Euro USD a while ago. Thank you for that. Yeah, with the Euro USD one, it wasn't Euro that I was actually trying to check. I think it was CHF something, but it was before the webinar. I forgot it now. But with the Euro USD, right? Same thing applies. I think we're going in. We're meant to be going back to the Euro USD on. Let me just confirm that. Let me confirm what I'm gonna go in on the Euro USD. Euro USD should be Monday on the 15th, right? Let's check Euro. So tomorrow would be the ideal time to start looking at that. And what you can see right here at the tip right here, price has actually kicked it to the top. So price has rejected that zone. And what we might actually see, we might see a gap. Regardless of what direction we see that gap in, we're going to look to buy Euro USD regardless anyway from tomorrow. Yeah, CHF. I want to check CHF for strength as well. We don't have much time, guys. I have to wrap this up. So last thing I'm going to leave you guys with. One last thing. And this is, if you don't take anything else out of this webinar, this is one thing you should take out. Before you go into any trade, any single trade, any trade, don't try to catch it at the bottom or the tip. Don't do that. Wait for price to cross over your EMAs. Ideally, I would love everybody to wait for price. If you want to go to the buy side, wait for price to cross over your 20, your 50, and your 200 EMA before looking for a buy, right? Don't go into the buy before price crosses it. Even if price seems like it's running away from that place, it's better you let the trade go and have the satisfaction that you were correct than you should be wrong when you go into your asset and price tends to bottom down. Wait for price to cross over your EMA before you go for the buy. So if you're going for a buy, wait for price to cross over your 220 and 50. If you're going for a sell, wait for price to cross below the 250 and 20 before you look for your seller entry. Okay. Don't do if price is stuck in between like this, don't go for it. Wait for it to fully cross over and go in right here, going right here if you can. But don't go in between, right? Trust me, I have tested this one. It works. If you just stick to when price cross the EMAs, as simple as it sounds, you will tend to make a lot more. Become more profitable in the long run than if you didn't wait. Okay, you don't want to get caught out. For example, you don't want to get caught out in situations like, let's say, right here, um, right here. You sold. No, actually, this is even a bad example. I want to look for one that the price trapped, literally trapped this decision. These are on this is a small time frame. So look right here, for example. Let's say you wanted to sell and you sold right here. Price came all the way down here and then boom, price started going back up. You don't want that. You want price to properly clear through and then go in. And don't use the loan. Use it in accordance to what you've analyzed before. So with this euro, for example, and let's say we wanted to go in on this one, for example, you can't use it. You can't wait on a 4-hour time frame because by the time you're waiting on the 4-hour time frame, price is too long. So if you use a lower time frame to go in for your entry, you can go on the 15 minutes and wait for price to cross like this, then go in. Okay, don't go in between somewhere around here or somewhere around here. Go in after the cross has been successful. Okay, I think that would be the last thing that I would touch on today. And let me check CHF seasonality. Yeah, CHF is also meant to be going up. So there's quite a lot of trades this week. CHF is meant to gain strength until the which day is this? I don't know what date it is. 18th. Euro is meant to gain some strength up until I think 18th as well. Yeah, around the 18th as well. So and GBP is also meant to. Yeah, I showed the Nasdaq. I already shown Nasdaq. It's a good trade. Thank you for that one, by the way. It's because of you I went into it. But that's literally all I have for this week, guys. So take care of yourself. I'll probably give a signal or 2 signals in the group this week. So it's just something we can we can do together. Okay. Take care of yourself, guys. And if you have many questions, just pop in the chat room. I'll send the indicator for you guys to have as well. Okay. Take care of yourself, guys, and have a wonderful trading week ahead. Bye.